Does your family ever get exasperated with you for stockpiling such things as paper towels, bottled water, or toilet tissue? Well, they certainly can't object to you stockpiling money. Silver, the only money recognized by the U.S. Constitution, and your first 10-ounce bar of pure silver can be had at spot price with no premium by going to sdbullion.com/RP. And when you buy it that way, you'll be supporting Reluctant Preppers as well by going to sdbullion.com/RP. Thanks. This is a quick update to thank you for building our number of patrons to 76 and growing on patreon.com/reluctantpreppers. Soon, when we reach 100 active patrons, we're going to start sending out a 1-ounce U.S. Silver Eagle each and every month to one active subscriber, so you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. Today is Monday, August 20th, 2018. We have a first-time guest today. Matt from Silver Fortune is here with us today. He was requested by one of our subscribers, and we had the good fortune of getting him to come on the channel. Matt, thank you for joining us here on Reluctant Preppers.
Thank you. It's my pleasure to come on for this interview.
Could you give our guests can you give our subscribers a brief understanding of your background and how you got so involved in starting your Silver Fortune channel?
Yeah, absolutely. You know, without giving a big, long background as to how I got into precious metals and all of that, because it is a long story. You know, I wish I could say I have the same pedigree of maybe some of your other guests here, former traders, people that work professionally in the precious metal sector. But I don't. I'm just kind of an average guy that has a passion for this and I think has a fair understanding and knowledge of all this. I got into precious metals a couple of years ago. And pretty soon thereafter, I decided I want to start a YouTube channel on this. At the beginning, it was just a very casual thing for me. I just wanted to talk about it. It's something I was passionate about. But over the years, I have always strived to learn more and more about it. And I think that in some ways, I think a lot of my viewers and subscribers find my voice to be refreshing. Because it is, and not to discount the experts, quote unquote, experts' opinions, but I'm not necessarily paid for or bought for by any large firms, banks, or anything like that. So you don't have to worry about that. And also, I do have a habit of breaking down things in layman terms, trying to explain things to people using very simple analogies, and I think a lot of my viewers enjoy that. So really, my path into precious metals. Originally maybe it began with kind of prepping and then moved into some interest in politics, and then kind of from there I woke up to this world of economics and how important economics are, and once I began to study how the world economies worked and how the markets work, precious metals just seemed like a no-brainer to me, and it continues to be the case today. You see a world filled with bubbles. You see a world filled with paper assets and digital assets more and more every day, and something physical like silver and gold. They just make sense to me. And so I guess that's why I continue to be so passionate about it, and why I continue to talk about it so often on my channel.
Well, you were recommended, as I mentioned, by one of our subscribers, and we had about 3 different questions we really wanted to zero in with you on today about silver specifically. The first one has been smoldering around for some time. We had David Morgan on about a month ago talking about the big market action that's been happening on silver. Everybody's familiar, I think, who's been paying attention to it. Silver ran up to a big spike in 1980 and again in 2011, and has been in arguably kind of a holdover from its 2011 high. David Morgan had stated about a year and a half ago that he thought the bottom was in the silver market, and that he pointed out that from a technical trading standpoint, there's been this flag formation where the the peaks and valleys between the highs and the lows of the silver spot price have been getting narrower and narrower and narrower and compressed. The range between the lows and the highs is becoming narrower and narrower over a 2-year period. If you look at a 2-year chart, it looks like a pennant flag, pointing wide on the left and then pointing down to a narrow point. And it was going to come to a crisis right about now. And just last week, when we had the Turkish turmoil in Turkey with the government and the debt and everything, and the Turkish currency all kind of collapsing and being stressed together, we saw silver drop significantly below sort of the center line of that flag formation. And some people were saying it could go either way, but it just can't keep, when the tip of the flag comes, something has to happen. It's got to break one way or the other. In your view, and with those that you've talked with, is the breakdown in silver from the technical flag formation significant? And do you think it's most likely that it's the beginning of a major down leg in silver prices? And if so, how low can we realistically go before we hit a much more solid support level?
Yeah, that's a lot to cover there. So I'm not a huge technicals guy. I don't, I pay attention to the charts, but I don't, these pennant flags, everything that you're talking about, I don't follow them a ton. But the one that you are referring to, this trading range, this is something I covered extensively this past spring, because it had held to be true for so long that it was trading in this range, a tighter and tighter range. And I said, back then, at the time, it was around between $16 and $17 that silver's got to do something. This suppressed volatility, and remember that term because we might come back to it later on in this interview. Suppressed volatility, it can't continue forever, and eventually it's got to break out one way or another. It kind of did a head fake up above $17, came back into the range, and of course we know the story since then that it's gone below $16 and now below $15. So where is it heading next? As much as that technical chart was important for as soon as it broke upwards or downwards, there's going to be a significant move in one direction or the other. I don't think this is a technical move in the market. Over the last couple of months, and I've talked about this extensively again on my channel, the price of silver, and even more so the price of gold, over the last 3-4 months has had a very tight correlation with not just the dollar index, but more specifically the exchange rate between the Chinese yuan and the US dollar, meaning that as the Chinese yuan has gotten weaker and the dollar's gotten stronger relative to the yuan, silver and gold have gone down. It's almost a mirror image of these two. It's a very tight correlation. Now, this has happened in the past. It's happened with the Japanese yen. It's happened for periods of time with the euro. Of course, this time around, it has lasted a very long time. In my opinion, it doesn't mean, I don't think, that China has pegged their currency to the yuan, but there is a tight correlation for whatever reason. It could be China, it could be the US, it could just be traders wanting to find some sort of correlation. So that's important because the Chinese yuan has undergone a massive devaluation thus far in 2018. Not as extreme as other currencies, but you have to consider the size of their economy, size of their currency, a huge devaluation, even larger than the one back in 2015, 2016. Now, where it stands right now, I don't know the exact exchange rate, but just shy of a key resistance level or support level for the yuan of 7-1. That was kind of the line that it refused to cross, or more accurately, the People's Bank of China and the Chinese government refused to let it cross back. I think it was end of 2016. At the end of its kind of bear market back then. That's 7-1. So it's just shy of that. Okay. So you have to ask yourself, if silver were to drop much, much lower and gold lower, let's say silver heads to $12, but below the cost of production at a lot of mines, say it heads to $10, $9. If this correlation holds true over the next 6 months, 12 months, and it doesn't have to be a perfect correlation, but a general correlation of the yuan growing weaker and weaker, there's going to be a lot of fireworks going off all around the world. And this is bigger than just the yuan, I should add. The U.S. dollar strength has been talked about a lot thus far in 2018. Relative strength, I'm no fan of the dollar or fiat currencies, but relative to the yen, the euro, the pound, some of these bigger currencies, sure, it's had a lot of strength. If you throw the yuan in there as well, had even more strength. But if you throw emerging markets in there, I'm talking Brazil, Argentina, Turkey. Those are some of the big, South Africa. Those are the big ones that have been in the news lately. If silver is going to head to $12 to $10, we're talking about the Chinese yuan not breaking through 7-1, but like 8-1. Okay, we're talking about the Brazilian real dropping another 10%, another 20%. Same thing goes for the lira, the Argentine peso, South African rand. So it's possible. This emerging market crisis that I've talked about on my channel is a real thing, and the possibility of it becoming a contagion event, at least contained to emerging markets, is a very real threat. But so, I guess what I'm saying here is that yes, it can drop lower to 10, to 12, whatever, much lower than where it is right now. But if it happens, the world economy is going to be teetering on the brink, because I've been holding the view for quite some time now that the U.S. economy is not immune to what's going on around the world in these emerging markets, and especially what's happening in China. For the last 100 years, the U.S., for the most part, hasn't really imported a recession or a depression from abroad. I think, with this current crisis, with the current downturn in the Chinese economy and their currency, ongoing trade wars, I think it's a good chance that this next recession, this next depression in the United States could be imported from abroad, from emerging markets, just because the U.S. economy plays a smaller role in today's age. So yes, silver and gold can head lower. You have to understand that it means that the dollar is going to be much stronger, and more importantly, a lot of these other currencies are going to be much, much weaker, along with their economies, their stock markets, etc. And eventually, the United States, they're going to catch that cold as well. They're going to catch that contagion. And of course, the next step from there is, you can pick an event, a financial crisis, a debt crisis, large defaults from financial institutions, you name it. But eventually, the next step is going to be a weaker dollar, the Federal Reserve stepping in like they did in 2008, 2009 with quantitative easing, the U.S. government stepping in with bailouts, helicopter money. I wouldn't be surprised if that gets thrown around. And of course, the end result of that's going to be a weaker dollar and more inflation. So, I guess personally, this ongoing decline, I'm not the type to say I'm not going to buy until it gets to 13 or 12 or something like that. I think that's a risky play for me personally. Your viewers, my viewers, can make their own decisions. But I see this as a buying opportunity, because I know that the end game here is going to be a weaker dollar, more inflation, and the big theme here is not just a weaker dollar, but really weaker currencies all around. So that's kind of how I would answer that question as to where I see silver heading in the future.
I wanted to follow up on one of the points that you made along the way about setbacks in, for example, the Chinese economy, and then those effects coming, you mentioned in other emerging economies, coming back to our shores. There's been some debate about whether the recent drop in several metals prices, silver being the most recent of them, but also copper and also platinum, really reflect reduced industrial demand, given various aspects of what you could call a global recession, or at least reduced global industrial demand for certain metals for various reasons, including sometimes material substitutions in some industries, where we're seeing some solar manufacturers coming out with silver-free solar panels, for example, and that was always cited as one of the industries of the future that was going to be needing silver. But also, like electric cars, electric vehicles are rampantly on the increase, and that spelling a decrease in catalytic converters and therefore platinum demand. And just yesterday I was seeing articles about copper hitting big lows here, and people surmising that might be related to industrial basically slowdowns all over the world. What is your view on whether the drops in some of these metal prices is actually reflecting, kind of like telling us the truth about a global recession in the making?
Yeah, I definitely think that's a case that they call copper, Dr. Copper, because of its prediction of weakening economic growth. Same goes for platinum. Now, silver, at least over the last 5 years, hasn't had a huge decline. I think its peak was in 2011, at least in the last 5 or 10 years. 2011 was, I think, the peak for silver industrial demand. It's come down a bit, but I think it's up in 2017 from where it was in 2016. But this recent price action, I don't see it as so much a result of decreased industrial demand as much as I see it, or sorry, decreased industrial demand, but as much as I see it as a result of a couple different factors. A rising dollar, which I already discussed, falling foreign currencies, manipulation that always gets kind of called in there as a potential cause, and I would agree that plays a role, but also falling investment demand, especially in the West, United States, Europe. We just don't buy as much silver coins, silver bars. You look at the U.S. mint numbers, 2018, even 2017 was just kind of a pitiful year compared to the 5 years previous to that. Now, that doesn't mean everybody's kind of slow down with their buying. Countries like India, Indians are stacking a ton of silver right now. I mean, sure, they import almost all their silver that they use, and a lot of it does get used in industrial uses. But as much as the Chinese are gold bugs and stacking gold, I mean, the Indians stack a ton of silver coins and bars, and on pace. As of April, we'll probably get more data from this soon. This was reported by Lewis from Smile Gold. The Indian imports, they're on pace for, I think, a record year this year, and so there is demand out there. This price decline, I don't see it as so much of a lack of demand. Again, I think it's related to some of those other factors. Now, you did bring up something really interesting there, though, talking about other metals. This is something that I've heard talked about by a couple different people, David Morgan, I think Steve St. Angelo, some others, and it's something I've kind of talked about quite a bit on my channel as well. There is this notion that if there were to be some sort of an economic crisis, or even just a global recession, global depression, let's say GDP worldwide slows down by 2% contraction, 5%, 10%, whatever the number is, a lot of people will say that silver is not a good hedge for that, because a lot of the demand for silver is industrial. So if you have the economy slowing down, people are buying fewer cars, they are making fewer investments into maybe solar panels on their roofs, they're buying fewer iPhones, et cetera, et cetera. However, you have to look at the supply side of things for silver as well. Yes, I think industrial demand could slow down. I also happen to think that investment demand would increase rapidly, just like it did back following the Great Recession, a huge increase in investment demand. However, the supply side for silver also makes for a bullish argument as well, because something like upwards of I think it's 60 or 70% of silver supply coming onto the market from mines is mined as a byproduct. Okay, and these silver miners, these byproduct miners, it primarily comes from four different types of mines. You have gold mines, which I think maybe 10, 15%. I don't have the exact statistics. But then the rest come from what you'd consider base metals, or metals that almost solely drive their demand from economic growth. Zinc, copper, and lead. Those are the big three. And so what this means is that if we have a major economic contraction, whether it's a full-blown collapse or just I guess depression, more run-of-the-mill, something like we had back in 2008, you're going to see industrial demand, overall demand, drastically decline for these metals like copper, zinc, and lead. And so what happens when you have a decreased demand? You're likely going to have lower prices. With lower prices comes mines eventually, maybe it'll take 3 months, 6 months, but eventually slowing down or completely ceasing production of these metals, because they'll no longer be economic. Maybe some of them will fold because they already had a lot of debt, and there's going to be a lot of deleveraging in such a period of time. And so all of a sudden, silver, which previously had something like 70% of its supply coming from these byproduct mines, that supply could be cut by 10%, 20%, 30%. And all of a sudden you have a very different story heading into this. Sure, industrial demand's coming down, but so is supply, right? And investment demand could be heading up much, much higher. Investment demand could be what's driving the market. So I just thought I'd bring that up because you brought up some of these other metals as well,
Sure.
platinum, copper, and base metals. Those, for the most part, there's not a whole lot of people that invest a ton into copper bullion. Maybe they trade futures contracts or paper contracts. Platinum, maybe a little bit more investment bent, but for the most part, they're industrial metals. And I think silver, yeah, it's an industrial metal. It's kind of a bipolar metal. You have that monetary and investment demand. But I think in the next recession, I think the supply and demand fundamentals for silver are actually a lot more bullish than maybe conventional knowledge would suggest.
There's another great debate raging around the topic of JP Morgan's role in potentially suppressing silver spot prices through selling of paper future contracts, or whether they are positioning themselves following their if they've been doing that paper short selling to take up a huge negative position on, a short position on silver, whether that now has rotated around where that they've offloaded that negative short position. And that's one thing Ted Butler was claiming, was that JP Morgan now, for the first time in modern history, is now aligned to benefit from a rise in silver prices going forward, and that shifts the game, because they've often been assigned the blame of being the ones to quash these investor-driven rallies that have happened every couple decades or so. But there's others who have written in response to those videos on our channel, at least, that that JP Morgan does not have any long position in silver. And previously, some people had been commenting that that JP Morgan didn't have any short position in silver, that they were just hedging on the parts of some of their clients' accounts. What do you hear from the people that you talk to about whether or not JP Morgan truly has or does not have a long position in silver versus a short position in silver?
Yeah, it's a great question. I mean, you really cannot have a conversation about the silver market in today's day and age, a comprehensive discussion, without bringing up JP Morgan. They're such a big player. If we do believe that the metal that's on the COMEX, or at least JP Morgan's registered stock, is actually there, I mean, their hoard of silver represents likely the largest hoard held by one single entity in today's day and age, and unless there's some government or individual out there that is secretly hoarding even more silver. It also represents likely the largest hoard that's ever been held by a non-government entity in U.S. history or world history as well. So it's a lot of silver, and it's obviously something to talk about. Currently it sits at upwards of 140 million ounces of registered COMEX stocks. Now, there will be people, and maybe I'll ruffle some feathers here, because I know people get very passionate about whether or not that silver is actually there, or is it just paper silver. There'll be people that will definitively say that they know that JP Morgan either does or does not have that silver. The fact of the matter is that in this space, I'm very doubtful that anybody would have that type of insider knowledge. That's far, far above our pay grade. With that being said, people are welcome to hold their opinions and look at the evidence and then make some informed decisions based off that. And based off the evidence and some of my own thoughts on it, I happen to think that, yes, JP Morgan, they do have that silver. I mean, I don't think it's a coincidence, that JP Morgan opened up their COMEX vault back in, I think it was 2012, shortly after silver peaked in 2011. And since then, they've been stacking the silver like crazy. Is it their client silver? Maybe some of it, maybe a lot of it, I don't know. It's also been suggested that JP Morgan has a massive off-balance hoard of silver. Some people say upwards of 500 million ounces, I've heard quoted. Again, we don't know. It very well could be there. Now, does JP Morgan play into this manipulation? I think that's the next question we have to ask. And I think the answer to that is yes. If you have a lot of physical silver on the COMEX, you can use that significantly to manipulate the futures, manipulate it through different means. And yes, I think JP Morgan's done that. Now, where I think people miss out on this a lot is that JP Morgan, for a long time, have not only, from time to time, I think, squashed the price of silver. Them and other bullion banks. You see a rally one day and the next it's down 50 cents. That's depressing. And honestly, that type of manipulation, it affects investors a lot. If you see an asset that just cannot seem to break out, it's a mental game. I'm going to get out of that. I'm going to go into the stocks because they're up 10% this year, or 20%, depending on what year we're talking about.
Right.
So that manipulation, that downward manipulation happens. However, I brought this term up earlier, suppression of volatility. I tend to think that JP Morgan, even though the price in the first half of 2018, especially before this huge drop, even though the price was mostly sideways, I think JP Morgan made quite a bit of money off that. Not a ton, not life or corporation changing amounts of money, but they made money off of that through management of volatility in the markets, meaning that they used call options. Mm-hmm. They used mostly, I think they sold volatility to traders, either traders that were betting on it going up or down, and they made money off that because if they're going to sell volatility, and then they also control the price and make sure that it doesn't leave that trading range, which at the time was between 16 and 17, then they can make a lot of money off that. And this is not a new strategy. I mean, plenty of different traders do this in the stock market, or even pensions I've seen lately have been using options to sell volatility. It's risky, but if you have complete control of a market, especially something like the silver market, you can make a lot of money off that. Now, I should add, though, along the lines of what Ted Butler is saying, things have changed. Volatility in the silver market is markedly higher than what it was for most of the first half 2018. And, that does raise a question, have things changed in the silver market? I don't know. I can't speak to it maybe with as much insight as Ted Butler, just being honest with you. Maybe he has some other knowledge here. And certainly if you look at maybe some of the commitment of traders reports, they would suggest that bullion banks or commercials are actually going long precious metals, or going long silver at least. That possibility exists. And I don't know. It's hard to say. If that is true, these next 6 months, 12 months, heck, even 3 years. I mean, these bull markets can last a while. It can be huge because, yes, that the long position that JP Morgan has in silver, I think they've had it for a long time. Their long position is physical silver. I mean, it's no different than if you went and bought 100 shares of a stock. You now have a long position in that stock. So forget these if they're going long or short through options or something like that. They have a long position in the metal in the first place. So we could, if that's the case, then yeah, silver's heading much, much higher over the next year or two. And JP Morgan's going to profit a ton off that, like it or not. But I don't know. I tend to be a bit of a wait and see guy in terms of that. I know that they do have a massive long position. I know that it's unlikely they would accumulate this much silver for no reason and then just slowly sell it off. That just doesn't make sense to me, especially if they're selling it off over the next couple of years in an environment in which we're likely to see a lot of paper assets decline in value a lot. A lot of people rush into safe haven assets, including physical, whether it's commodities or silver and gold specifically. That doesn't make a whole lot of sense to me. So I think JP Morgan stands to benefit a lot from a rise in the price of silver. It's just all a timing game. And for me, if it happens, in the second half of 2018, if it happens 2019, 2020, it doesn't make a huge difference to me because I can still buy it cheap. My viewers can still buy it cheap. And I know that, if JP Morgan has a vested interest in silver going up, then it's likely to go up eventually. And I have a vested interest in that as well. So, I wish I could be a cheerleader for metals right now, but over the short term, I can't. Just because it's going to maybe take a bit to recover from this, but long term, I think the fundamentals are as solid as ever, and the price is even cheaper than where it was a month ago, 3 months ago, 6 months ago. So again, personally, I see this as a buying opportunity. Make these decisions for yourselves, obviously, but as for JP Morgan, it's hard to say, but obviously they do have kind of the mother of all long positions in their physical hoard.
When you mentioned just recently here the lower price recently than several months ago, you posted a video last week about silver all-time inflation adjusted low. We talk a lot about the spot price of silver and its history, but almost never do people talk about that in terms of inflation adjusted numbers. So could you zoom in on that for us, because it seems incredibly important when you're talking about something real and you're comparing it to something that's a sliding scale.
Yeah, fair disclaimer here, talking about inflation adjusted lows. This idea, actually, if I remember right, it was brought up by Andy Hoffman, who is, as far as being a precious metals enthusiast, seems to be no longer with us, and he's kind of moved on to the realm of cryptocurrencies.
That's right.
And maybe you're aware of all that. But, it's a term that he used accurately, maybe not, but it definitely appears that where silver is right now in the $14 range would be the inflation adjusted low. I made that video and I had some viewers say, hey, here's a chart from, I think it was Macro Trends, which is, if you type in silver price history on Google, that's gonna be one of the top results, and then it has an inflation adjusted option. If you look at that, it's gonna show you that in the past there's been lower inflation-adjusted prices for silver, either in the bottom at the end of 2015, beginning of 2016, or early 2000s, early 1990s, or even way back, before we had silver removed from our currency. All of those times, sure, but those are also using official government data for inflation, and I'm highly skeptical of inflation data from the U.S. government. I don't know. I don't think any of us can truly put a number on it, just because it's a difficult thing to compile, I think. But I do subscribe to kind of the school of thought that's kind of been pushed forward by John Williams of his website, shadowstats.com. Highly recommend it to all of our viewers to check it out for themselves. But it just basically provides an alternative look at government data, not using some imaginary formulas or anything like that to calculate things like real GDP or real inflation in this case. In the case of inflation, it just uses methodology that the U.S. government had used in the past. And since then, they've tweaked that methodology. And I think they've tweaked it to make it appear as though inflation's actually lower than what it is. And, I've heard this from a lot of my viewers. I think I had a guy comment today. He says, in the last 5 years, my wages haven't really gone up, but my cost of living has, right? You might not see it in things like cell phones. As long as I've been a cell phone buying American, or at least smartphone buying, they've been in the same range. And that's because technology gets cheaper.
Sure.
It can be deflationary because it's easier to make and stuff like that. But look at the cost of healthcare.
Yep.
Look at the cost of tuition for college.
Absolutely.
Even food,
Food.
It sneaks up on you, but those things rise, I think, a lot more than the U.S. government is ever willing to admit, because people don't like high inflation. They're willing to accept, unfortunately, but they're willing to accept 1%, 2%, 3% on a year-over-year basis, but 5%. 6%, that's a little bit too much, but that's kind of the numbers that I use to calculate that all-time inflation adjusted low for silver. It's quite a bit lower than what it would have been back in 2015, and sure, maybe you could find some time throughout human history that it was lower than what it is right now, but kind of the point of that was that it's cheap now, and inflation continues to if you look at just the numbers for these lows, it's not as low as it was back in 2015. But if you look at, after a year and a half inflation, it's pretty darn cheap right now.
Yeah, I want to corroborate what you're just describing. If people want to check out, there's another article by Jeff Clark at goldsilver.com that talks about inflation-adjusted silver prices based on and you mentioned how the government manipulated statistics will artificially under-report the cost, the consumer price index, but using the 1980 consumer price index formula and using that consistently from years 1970 to 2017, and from shadowstats.com shows a chart where we are at the lowest silver price, near all-time lows, using the 1980 CPI. And Jeff Clark makes a point when I wouldn't have interviewed him that it isn't fair when the government keeps swapping out different categories of things they do include or exclude from the CPI, and it seems like the things that really hit most people's real lives, like you mentioned, food and healthcare, the things that are just like at the bottom of your Maslow's hierarchy of you've got to have these things, are astronomically increasing year over year. So the real impact to people that people are experiencing in their lives of decreased buying power is no longer the measure that the government prefers to use when reporting official inflation, consumer inflation.
Yeah. It's crazy because if you went to analysts or traders that are knowledgeable on the subject of Chinese economics, okay, and if you ask them, in the modern day, does China manipulate their economic data? They would say, yeah. I mean, we have to pretty much guess as to what the real numbers are because we almost have to account for them manipulating GDP higher or manipulating it here and there. And it's widely documented that China does it, whether it's at the higher level or it's at the city or district or province level. But it happens a ton in China. And yet you ask those same traders or a lot of mainstream analysts, would the U.S. government ever do that? No, that's a conspiracy theory. There's no way that the Bureau of Labor Statistics would manipulate something like unemployment, right? There's no way that the government would ever manipulate something like inflation data. But the motive is absolutely there. And more often than not, the motive is not necessarily a partisan motive either, right? Republicans, Democrats, I think they've both done it, right? Their administrations, they're and not to get too political here, but this is almost an apolitical thing, is what I'm saying. That it's not a party thing. It's a bigger government type thing. If both parties and the Fed can keep you convinced that GDP is high or positive at least, and that unemployment's low, inflation's low, then you don't have to worry about it. But I think we should at least question, the legitimacy of that data. I mean, especially when you're talking about how much they've changed the methodology throughout the years.
Well, Matt, we've been asking you questions that we had prepared, but we haven't given you a chance to propose any specific topic that's at your top of mind these days for our viewers, since this is their first chance to meet you. So you have the floor here. Is there anything that you'd like our viewers to look into further so that they can increase their awareness? Because our tagline is helping you be aware and prepared.
Yeah, absolutely. And I think, being prepared all around is important. I got into silver and gold in the first place, not just because of prepping, but because of a greater awareness about politics, about economics and all of that. And being mentally prepared is perhaps one of the greatest assets you can have. I talk about a lot on my channel. It's hardly just silver and gold. I don't cover politics a ton. Okay, that's one topic that I try and stay away from somewhat. But things like economics and kind of world markets and all of that, I covered a ton. The big one that I would pick out to be aware of, for the remainder of the year is the ongoing U.S. debt crisis. Now, when I say that, I'm being somewhat facetious because the U.S. is not undergoing a debt crisis right now, at least on the surface. The U.S. government's likely not going to default on their debt this year. States, cities, it's not an issue, right? But what I'm talking about is the effects, the real world effects that we're seeing right now around the world because of massive amounts of debt issuance, basically U.S. government selling bonds. Okay, sure. A huge amount of supply coming onto the market thus far in 2018. Part of this is Trump tax cuts. There's and always ever increasing expenses for the U.S. government. The other piece of this is the Fed and their ongoing quantitative tightening program, meaning that they're buying fewer and fewer bonds. So the end result of this is a lot of bonds that are on the market that had buyers before, or they just weren't there before, that now need buyers. And then, of course, the U.S. government accepts U.S. dollars as currency for these bonds. And so what this has caused is basically a U.S. dollar shortage. Not literally. It's not like you can't get dollars from the bank or anything. That's not what I'm saying. But for emerging markets, this is a very real issue. And that's what I say. It's a U.S. debt crisis. What's going on in Turkey right now? Argentina, Brazil, South Africa, what I think you soon will see in places like potentially Mexico, India, the Philippines. It's already going on in Pakistan, Poland. A lot of these emerging markets, they depend on U.S. dollars for funding. Sometimes euros, sometimes pounds and yuan and other currencies, but a lot of them depend on a lot of U.S. dollars for funding. And so if there's fewer U.S. dollars to go around because U.S. government is soaking up so much dollars with its debt, again, debt crisis, well, rates go up. and more often than not, the dollar goes up versus these smaller emerging market currencies. They have a crisis, and so that's what I would say is to pay attention to for the remainder of this year. What's going on in these emerging market currencies and their economies? How quickly will it spread to other emerging markets? Because eventually, I think it's going to be kind of a rush to the exit. That essentially there's going to be a lot of capital that is invested in these emerging markets, or even consumers in some of these countries that want to get out of their native currency because they see Turkey's currency falling or Brazil's currency falling. They want to get into the US dollar, all right? So now there's an even greater shortage in the US dollar. Well, eventually I think this contagion is going to spread beyond emerging markets. It's going to spread to countries like those in the European Union, to China, Australia, Japan, South Korea, Canada, and of course ultimately the United States, more developed economies, if you will. So watch for that. I've been making the prediction for a while now that if any of you guys are out there into monetary policy, you follow what the Fed has been doing. They've been tightening their monetary policy for a while now. We're kind of on a year now that they've been doing this quantitative tightening program, i.e., unwinding their balance sheet. My prediction is that by the end of this year, something's got to give. Either a contagion crisis from abroad or something internal here in the United States that will cause the Fed to take a pause and slow down here for a second and think maybe we shouldn't continue on this tightening path. I think they're going to be cutting this quantitative tightening program pretty soon here, or reversing it altogether and start quantitative easing. I think something's got to give by the end of the year, because their current path is, we're not feeling it here. Stock traders here in the United States are not feeling it, but so many countries around the world are. And the U.S. economy, U.S. markets, they might experience some benefit from that over the short term because of inflows into U.S. stocks, bonds, and U.S. dollar. But long term, we can't survive without a truly global economy that is growing. And we're just not having that right now. No, in many ways, we're on the cusp of a global recession. It just might be that the United States kind of gets that memo last, right? They check their email after everybody else does. So that would be something I would pay attention to over the next 6 months or the end of the year. What's happening in emerging markets, and what is the Fed doing? Are they going to stop their current tightening policy or potentially reverse it?
Your sentiment about the Fed's actions is echoed by Gregory Mannarino, who talks about any potential collapse or major upset to the markets is going to start in the bond market, and watch that 10-year Treasury interest rate, watch how they defend it by purchasing up the bonds, and that will be the first symptom within this country at least. But you're saying you can already see the symptoms by looking overseas to the emerging markets like Turkey, Brazil, etc. So thank you for that reminder to keep our eyes on that horizon. Everyone, we've been talking with Matt from Silver Fortune for this very first time. Matt, it's been a delight. Thank you for joining us at the request of one of our viewers who suggested you, and I'm glad he did, here on Reluctant Preppers.
Thank you, truly. Thank you for having me on this evening.